Hello, this is Gary Schnitkey, and this is a 5-minute Farm Doc Daily dealing with PACE, the Post Application Coverage Endorsement. PACE is a new crop insurance endorsement that's available for this year. It will provide payments if a farmer cannot apply nitrogen after planting, and the reason for not being able to apply nitrogen has to be because of weather-related reasons. It's too wet. PACE is an event insurance. It will pay like hail does. If a hail storm happens, hail pays. Similarly, if post-application is prevented, PACE will pay. The final yield on those acres do not matter. PACE is available for the combo product, and it's available for RP, revenue protection with a harvest price exclusion, and YP. The PACE product is available in a limited area this year. It is a pilot area, and those pilot areas in Illinois is northern and central Illinois, Iowa, North Dakota, Nebraska, South Dakota, Kansas, Minnesota, Wisconsin, Ohio, Indiana, and Michigan also have areas or counties that are covered by PACE as well. Here is a simple example of PACE, and this is a McLean County example, and we are going to use a $5.50 projected price. By March 15th, the farmer decides to use PACE, and they decide their post-application percent, or the amount of nitrogen that's going to be applied post-planting, is 40%. The coverage election is 90%. And farmers will also have to provide the total N they plan to apply for the year by March 15th. If a farmer buys that product, 90% election, the premium for this product is $2.84, and that is for an enterprise unit. Payments in this case, if we can't apply nitrogen post-planting, will be $69. So when you sign up for that application or the PACE endorsement, you will know the payment, and that payment can go up if the harvest price is above the projected price and PACE and RP was selected. If a farmer wants to make a claim, they will indicate that their post applications were prevented from planting. Again, they will also report the number of acres of that insurance unit that was prevented from planting. That loss, again, has to be because of weather-related reasons. It has to be generally because of wet weather. It cannot be because of supply issues. If we see planting of corn on May 1st, we would expect post-application to be between June 1st and June 22nd, so the farmer would be reporting that application was prevented soon after June 22nd. If we have 10 acres that can't be insured or can't be post-applied, the payment would be 10 acres times 69 or $690. Again, that would be known, and that may increase if the harvest price is above the projected price. There are two caveats to payments. The first is the insurance company will check the post-application percent, and they will make sure that post-applications were roughly going to be at the level that they said they were at that the farmer indicated would be at the time of March 15th. What the company will do is make a calculation, 1 minus actual pre-application amount divided by approved yield times 1.2. And if that quantity is below the stated post-application percent, the revised post-application percent will be used. The second caveat is if RP pays, and then the PACE payment cannot exceed the deductible on the RP policy. That deductible is 1 minus the RP coverage level times the guarantee. We give an example here. If we have a 200 bushel guarantee yield, trend adjusted APH yield, and the projected price is $5.50. If we selected RP at 85%, the deductible is 15% or $165 per acre. You would multiply that by insured acres, and if PACE if the underlying product makes a payment, the PACE product cannot pay over that 165 times the insured acres. In many cases, that limit will not come into play because the total payment on a per acre basis does not exceed that 165. Here, I gave you an example of $69. In the previous example, the PACE election would not, that caveat would not come into play. Only if we had 70% or higher post-application percentages would that limit come into play, and then we would be limited if all acres were prevented from being planted. PACE has a couple elections. We used in our example a 90% coverage election and a 40% post-application percent. Post-application percents can range from 25% to 80%, and the higher the post-application payment, the higher the farmer paid premium, and the higher the PACE indemnity when they occur. In our example, we had a $2.84 premium for a $69 PACE indemnity. If we applied 80% post-plant, we would have an $8.18 premium and a $200 to $8 indemnity if that happened. We can also make PACE coverage elections from 75% to 90% in 5% increments. 75% is the lowest, and that will have the lowest premium and the lowest payment when it occurs. Conversely, 90% is the highest, and it will have the highest premium and the highest payment when it occurs. The units under PACE do not have to be the same as the underlying product. If a person selected enterprise units, they could use PACE on basic or optional unit level, could select basic and optional units to insure, and then select basic and optional units to insure. If those elections are made, the yield database must be in place. Same thing with basic units. We could also use basic and optional units to pay, and optional units, we have to use optional units. We can select the units that we want to use PACE on. So if we're using optional units, we don't have to insure all optional units. More information on PACE is linked or given in the FarmDoc Daily link below, so you can go there. And again, this is a new product that many farmers may wish to consider for 2022.